Hey, we're live. May 30th, 2024. I can't believe it's the end of May already. We're almost into summer. Things are, I was going to say things are heating up. They are outside, but they're certainly not with the markets. They're pretty flat. And we're going to get into that a little bit more in a minute. Good to see everyone here. We still got some people coming in. I will mention right now, we run about 30 minutes. And if you're new, we have a Q&A at the end of the session. So feel free to put your questions into the chat area and the Q&A chat area. There's Volodymyr. Good to see you. G. Andrea. Always nice. Always nice to have you with us. Yeah, drop a message. Just say hi if you want to or not. Richard, how's it going on your side?
It's going great.
That's what I like to hear. I like to hear some enthusiasm.
Yeah, and I'm going to take it. I'm going to take my turn this week to do the on this day in history. 296.
Okay, yeah, please.
Yeah, the year 296. Saint Marcellinus began his reign as Catholic Pope. I bet you never even knew that there was a Saint Marcellinus.
No, but usually if I talk about this day in history, it has some sort of tie-in to what we're doing now. But I'm just
but I'm not very good at this. So
okay, no problem. Did you say 296? Like we're talking like a long time ago, or 1296?
Yeah.
Okay,
296. Yeah, 296. Yeah, back when the world was good. Men were men.
Back when things were a little bit simpler, no doubt. Sandro's with us. Sandro, currently in. I think you meant to say Austria, but you could be in Ostia. Could be a new place. That's Austria. I was just in Austria. What was it? A few months ago. It was what a lovely place. All right, let's get started.
I haven't seen you for ages. Welcome back.
No. I think G&J was there a couple weeks ago or something.
But there was a hiatus, wasn't there? A pause. Yeah, but
perhaps
we feel the loss when our regulars don't turn up. So.
We miss you. Yeah. All right. So let's get on with the topic of today. We're going to talk about, ranges and vol. That's what's really coming down to right now. All our trading strategies are kind of based around ranges and vol. And it's sort of preparing for summer trading. And I put a question mark in there because we're getting close to summer. We can always have shenanigans, but it really starting to feel like that is the encroaching. Our vols are starting to consistently dip. Right now I can see we're about 52 on the D-vol. And, if we traded a lot of summers we've traded, 25 years worth, and you'll get that boom, just that drop. It'll happen pretty quickly. Vols will die. They'll be dead until the end of August, sometimes into September. Again, Bitcoin's a little bit different animal. Crypto's a little bit different animal. It's not the TradFi markets. Not all the floor brokers and market makers don't go on holidays like they do on sort of the New York or NASDAQ. But it might be pretty quiet. And if we remember last year, it was damn quiet. Vols were, I think, down around 30-ish. Maybe dipped lower at times. I don't remember exactly. And then, of course, boom, we had the if you were short too much gamma, you really got it took a poke when it exploded. Now, crypto 24/7 doesn't have it doesn't have these traditional markets. If the only player in town is ETFs, well, maybe it will die right down in that, because they're kind of more of a traditional business. But we're still susceptible to news. All kinds of news comes out all the time, and it can send it off 10 or 15% in one direction or the other. So we still have to expect that, but we're not going to put a lot of risk on. So we'll talk about that in a little bit. So preparing for summer trading, getting our mind adjusted, getting our trading strategies adjusted is very, very important, because it would be suck if you had to give up all your gains in the summer just because you didn't adjust your style. All right, so let's jump over to our synthetic miner account. We run other accounts too, and I was actually asked a question today. One of our other accounts is called the Dirty Bird. I love that name. But this is a synthetic miner. We set it up for you, Deribit Live people. We started it 13 weeks ago to the day, and we started with 0.0825 of Bitcoin. and we're up. Even from last week, we're up. So 0.1081 Bitcoin. Nice. We've got real low risk on there. Now we won't run high risk. Our Bitcoin equity 0.1055, and the Bitcoin mined is 0.20230. So we increased our Bitcoin by about 28%, up about 3% from last week. Our starting USD cash, $5,500. That's
pretty spectacular, right? Imagine if you'd started with like 100 Bitcoin. You'd be sitting on 128 Bitcoin now. You could just go and buy a house for what you just made.
It's absurd. I don't know. Yeah.
By rights, we should just stop for the rest of the year, because 30% increase is good going for any hedge fund.
Well, we're just going to tone it down a bit, I think, in the summer, but and I think we already have, actually.
Yeah.
And we have some specific rules around our trading strategies, and we're going to introduce more strategies. And of course, you can check those out at roguetrader.academy, and we're going to update our site soon. We'll have those strategies and results displayed on the front page or somewhere on there. You'll be able to see them. So when we annualize our returns, we're up 254% right now. Quite nice. Versus if you were just hodling, you'd be up about 28%. Not bad, but a far cry from our 250%. And we don't spend too much time on it. We do a live stream every day. You can check out a Patreon, Rogue Trader Academy, where we trade these accounts. And that's about it. Those are unnecessary. Those are just for us to chat and just sort of explain what we're doing. But we wouldn't normally spend that much time trading those. Here's the charts. We've got actually here. Let me go ahead and I'll make your head smaller, because
it's worth mentioning that I actually run the synthetic mining strategy for myself as well, for part of our home savings, just with half a Bitcoin. And my view on that is that it doesn't need more than half a Bitcoin, because after 5 years of this strategy, it's going to be worth so much that it'll pay for my Ferrari or my second home.
Second home, you mean fourth home? Don't lie. But here's the thing: we're assuming the Bitcoin will continue to go up, and we've got that assumption. If it's a zero, then it won't be such a great strategy. But I don't think that's going to happen now that everybody and their uncle's starting to get involved. So I like it, man.
I mentioned. Sorry. Yeah, I will bring this up later.
Okay, sure. I can see we've added a fancy trend line onto our chart here. That looks nice. I don't know if you did that or somebody else.
I think Olga did it.
Okay.
Every business needs an Olga.
Yeah, we need an Olga. Is ours for rent, or we're gonna? No, I don't think we should keep her. All right.
You can't afford her.
I can't afford her, exactly. Yeah. So we can see here that. Sorry, I didn't move your big head out of the way. I meant to. This is the annualized return when we're looking at the Bitcoin return, and we can see this nice blue line is us, and the red line along the bottom is if you're just hodling Bitcoin. Of course, your Bitcoin's not going to increase.
You said annualized. This isn't annualized. This is year to date. This is inception to date.
Oh, sorry. Is it? Oh, yes. It says right there, YTD returns. Yes, yep. My apologies. And here we have USD returns, hodling versus synthetic mining. The blue line is our synthetic miner, and the red line is just if you were sitting there hodling. So I like that graph. We've got a real divergence there. It looks like a.
Yeah, this is where you can see the added value quite nicely of the strategy. Mm-hmm. Really pleased with the way that's gone so far. Could have been so much different. If we'd lost money, it would have been a laughing stock.
Yeah, it's a little tough, when everybody's watching. It's like, yeah, what are you gonna do? But the thing is, we've been trading a long time, and I've gone through phases over the decades where, geez, you go months without making money. And then it just piles on, and then it goes dry again. And it just depends on your strategy and what you're doing in the markets.
And it's about whether you can maintain the level-headedness to adapt with the market and think it through, and sometimes take losses early, and all of that comes down to I keep saying it. Keep leverage low, because if you keep leverage low, you're never under pressure. You can make the right decisions.
Yeah, I 100% agree. And also the topic of today, where we're going to talk about summer trading, is really important. When you don't gear down, I've been hammered many a summer trying to make it work. So when I was prop trading, I had a goal of trying to make about 10 grand a day. And that was, some days you would, some days you wouldn't. And the thing is you get into summer and you start having some days where, I made 2,500, or I only did this, or I only did that. And you start to feel like you're getting really, really behind compared to what you did in February or March. So what do? You start to push it. Instead of, we used to take every lunch, same hours as the U.S. Stock Exchange. We would go to the YMCA. We'd play squash or whatever. We'd be away from the office during that time because it was very quiet. It was hard to scalp the markets. What did I do? I got to make money. I better sit here and trade some more. Sure enough, you're up $1,000, in the first half hour. Well, it's all gone. You push. Now you're down 1,000. Now you're down 2,000. And it just starts to call. And then you put more pressure on yourself to trade faster and more and look for opportunities where there is nothing there. There's nothing there. And you give up a lot of gains. And it took a few kicks of the can. And you get punched in the head a few times, and you slowly start to learn. Some people faster than others. So that's why I think this is an important topic to talk about before we really get into the summer doldrums.
The market will only give you what it's prepared to give you, and you can't force it. You're trying to move an immovable sea, right?
That's right. Yeah, the proverbial mink coat, right? If anybody ever read Reminiscences of a Stock Operator, classic trading book, Jesse Livermore, and he talked one day about a guy coming in the office and he had a fancy new mink coat, and everybody's kind of asking about it. He said, "Well, I'm going to get the market to pay for it." He bought it on credit or something, and sure enough, that's a cue to the market to pound you into dust. So, all right, let me just share some my screen here. This should be it. There's our silly chart, the Bitcoin silly chart. Actually, let me just go over to what am I doing? I got crypto, Forex. I got all kinds of things going on over here. Been trading what?
ETH.
Oh, I'm like, what the heck's going on here? There we go. I'll just put a Coinbase. Not done much. Not much to show here. Not much to talk about. Here's that, the range I had it in before. It's been pretty quiet since that big run up, so not much to do with it. So let's go back to.
Are people bullish or bearish on ETH at the moment?
Well, I've been reading a lot of articles about. That's not the feed I was using. About Wall Street insiders thinking that Bitcoin could be 10K by next summer type thing. I've seen more than one article that came out about, shit, I don't have the right feed here. What happened to my Bitcoin chart? I'm using the wrong feed. My apologies. I've lost. Oh, there's a silly chart. There it is. Okay, I got it back. Also, one of our members, Rogue Trader, alerted me to this. The U.S. dollar, South African rand. Just in case you're interested in trading crypto, South Africa is going through some elections right now, and it could be really, really volatile. So if you're into trading FX, you might want to jump over there and check it out. And I noticed since last night we've had a little bit of movement. Anyways, let's get back to Bitcoin USD. Was it Bybit? I just had it. Now I lost it again. For Christ's sakes! While I'm doing this,
doesn't matter. Anyway, you basically tell us, impart your wisdom without the boxes.
Well, I need my boxes for my wisdom. Well, you think this just all comes naturally? Anyways, so I am of the opinion, and the same opinion I've had for a long time, that if anything happens, any kind of new things, we're probably going to creep up, test the highs, and break out to the upside. Now, I had the suspicion that might happen before the summer session. Now that we're so close to the summer session, unless there's some catalyst, I don't think that's going to happen. I think we're probably going to stay in a range. I wouldn't be surprised to see 60 to 73. And I wouldn't be surprised if we stayed there all damn summer. That's okay. That's okay. I mean, I suppose I'd rather, I don't know what I'd rather have, but I like that in a way, because I guess I don't need the EMAs on here, because if it stays in a range, at least we know what to do. If it breaks the range, it's because there's some big event. It's not just going to slowly drift down, drift down, drift down. Oh, next thing you know, we're at 45,000. That ain't going to happen. If it goes down to 45,000, it's going to be an event. Just like if it goes up to 85, there's going to be some type of an event. And I think that's important to keep in mind. So during the summer, the temptation is to say, okay, well, let's say we drift down and we're at 62, 63. Thinking, oh, beautiful. I'm going to sell my spread with a 58 short put, and I'll buy the 55 or whatever you want to do. 2 weeks out, a month out, whatever you happen to be doing. I just want to reiterate that you should be doing it in maybe half the size that you normally would. Number one, the vols are low, so you're not getting squat for it. So if vols spike up, you're going to take a hit. Just if you normally run your account at 20% margin, that's your rule or whatever, run it at 10%. Maybe less. Just if you think, hey, my goal is to make $10,000 a month, or $1,000 or $100 or whatever you got going on, or you're trying to make 30 bips a day as your goal, or 10 bips, just cut that down, cut it in half.
But if you're worried about making money to live, just remember it's summertime, so you can just go and walk the dog in the sunshine, and that costs you nothing.
Yeah,
so you don't need to make so much money.
It'd probably save you money too half the times when you take a walk for the dog. So
I was going to say, Shane, sorry to interrupt, but I also look at the CoinGlass Bitcoin ETF thing, and I noticed for the past sort of 2 weeks there have been consistent inflows into the ETFs, either at or above the rate of mining every day. Mm-hmm. Now that can turn on a dime, because if Wall Street suddenly decides it doesn't like Bitcoin, then those ETFs will empty out pretty quickly. But at the moment, the trend seems to be that there is support, and so short of some major news, I feel I would expect it to just gradually creep up, but not quickly.
And it's interesting you say that. So we all know that Wall Street is full of degens, and that is basically the thesis behind why ETH might explode, because it might be like, okay, a lot of people might have missed Bitcoin, or they weren't allowed to dabble in that asset if they work for a firm, whatever, but they see ETH as the next one, and it's a lot cheaper to get into. And they're thinking, well, if we can take this thing up to 30K, I mean, it might take 3 years to do it, we can really mac it, and they might jump onto it as the next big thing. So, I'm starting to think about, well, maybe I should be dollar cost averaging into ETH in terms of spot.
Interesting. Yeah. My feeling on it is it's probably more likely to go down in the short term than up, just because the spike up to 44,000 was a reaction, like a surprise reaction to the ETF news, and nobody's positioned for it. And I reiterate that my mum would never buy an ETH, wouldn't even know what the hell an ETH ETF was about, but she might buy a Bitcoin one. She probably won't, but
Actually, I saw the news the other day too that now BlackRock holds more Bitcoin than Grayscale.
Yeah. I think that should terrify you as well as excite you, because Grayscale. Remember, Grayscale couldn't sell until recently. They were a foundation, not an ETF. And BlackRock are extremely intelligent, ruthless people, and if they think they can make money by the Bitcoin price inadvertently changing through no fault of them, it'll probably happen, right?
I don't know. And didn't the Grayscale CEO just step down too? I think I thought I saw that headline. I don't really follow that.
Survive that kind of drawdown on the fund.
Yeah. Immense, but they didn't lower their fees, what they expect. But anyways, sorry, back to this topic, and then I'm going to segue over to you for a second. And so, no, I just want to, because I want to stop showing this chart, is we've got this range where we're at all-time highs, just around here. We've got this kind of low put in. Let's just play the range in the summer. That's my entire plan. I'm going to sell call spreads up here. If the premiums are good, I'll sell put spreads down here if the premium's good. I'm not going to play a breakout. If the breakout wants to happen, I'm on it. If the market stays flat and we get through June, July, we're deep into August, and vols are stupid low, then I'm going to start loading up long gamma on long options, looking for a move in September, October, November to really explode out, because that's when we're going to have it. So that's how I'm generally, 10,000 foot overview looking. Now, trading in channels.
By the way, I'm looking for opportunities to get long risk reversals in September, October as well. But I just don't want to pay the carry. The carry at the moment is too high.
Yeah, that's what I was thinking. August might really be the time to do that, but maybe those will be buying Decembers. I don't know. Obviously, the vols will be higher out there, but it still might be a lot cheaper. The other thing I was going to mention is, typically as option sellers, we make tons of money when things hold a range and we've got decent volatility. If it stays in that range, we just sell on each side as iron condors, or just a spread on one side, then the other side, or whatever we're doing, or even making money by it dips down, we go long spreads, or just long naked, whatever. We make a bit to the top of the range, just like you'd kind of do if you're trading any other one delta product, for example. And I think that's the way to go. And I know, Richard, you, I'm going to stop sharing. As part of your other job with the fund, you're making markets, and you're doing things with automated and market making programs. And I think that you've been really doing well in this top range we've recently been in, since we had that run up to 72, back down to what it went down to 65, 64. And we've kind of been hanging out in that range. I think your bots have been doing very well.
Yeah, so normally we do thorough back testing before we sort of get a strategy in mind and then test it. But actually this time, about 6 weeks ago, we just had this idea that it feels right to do discretionary market making of the futures, and then if it goes wrong and you end up with a delta overnight, you can sort of mitigate that delta a little bit by selling a call or selling a put to get some premium in to help pay for it. And we run a bit of long calls and puts to put a collar around the risk as well. But yeah, that's returned like 10.5% in the first month of operation, which is pretty good. And actually, within the 3 days of starting it, we had a massive drawdown of like 10% because there was we had that big move down from 71 down to 65 or whatever it was.
Yeah.
And of course, we were long the market. But it recovered really fast. So this market's been beautiful for it because it's been reverting, plenty of intraday hourly vol, but no actual daily vol. It's been really nice. Right?
So, Richard, did you see you trading a spot or a futures with that?
That's actually futures.
Okay.
I mean, only because we get rebates on the futures, we don't get rebates on spot.
Sure, yeah.
And the futures are more, more likely to get. I mean, the people have got gamma on their market in the options, so they're forced to pay for the options.
Yeah.
So
just before we move on, someone Polka asked a question: what is low 1x2? I'm not sure what you mean. If you could put
it means leverage. We
leverage.
Low.
Okay.
Yeah. So my rule of thumb is, as we going into summer, whereas I've been running the synth miner for my own account, I've been short 3 times notional inputs, so 3 times NAV as notional. So, for example, if I own 1 Bitcoin in collateral, I've been short 3 Bitcoins of puts and short 1 Bitcoin of calls. I'm now looking to be short 2 Bitcoins of puts and maybe half a Bitcoin of calls. And then if vol goes any lower than this, anything under 45, I'm going to just be one contract. So one unleveraged, and maybe even actually just sell puts by calls if vol's that low, because if vol gets that low, that at some point it's not going to be that low anymore. That's my rule of thumb, right? So I mean, don't do what I do, just don't do what I say, just think it through for yourself. But
we got real dry last summer. It felt like that low vol was never going to end. And it took a while. Like we got into September, I think, before we really started to creep up again.
And if we can make 10 basis points a day on good days, that's plenty. That's 50% a year, right? You don't need any more than that.
100%. Just before I get to the rest of the questions, Richard, you said you had something you wanted to mention at the beginning of the call. You said, I'll tell you about that later. Do you remember what it was? I'm very curious. No?
Yes.
Oh, you do? Okay, tell me.
Yeah, because another thing we are actually talking about doing as a part of the Rogue Trader Academy is the Lunar Cycle Fund.
Yes.
Because we've been reading into, there's been some research done. There's a paper, you can look it up. Google cycle of the moon versus stock returns.
Mm-hmm.
And it turns out that on average, globally, in the 2 weeks around a full moon, markets tend to be at their peak and they drop. And the 2 weeks around the new moon, they tend to rise. So we're wondering whether we can, whether this works for crypto as well. So we're looking into it.
Fantastic. Maybe we can incorporate some pagan rituals in there too.
Yeah, I was thinking
do some dancing around the fire and things like that.
Tarot cards and lunar cycles. Yeah.
Excellent. That'd be fun. We could put a little bit of money in an account, and it'll be one of the ones we feature. And we'd eventually like to have 6, 10, 12 accounts over time with just specific strategies, and just let's see what they do, and then let's tweak them. So, but anyways, let me move on to questions. We're almost out of time. Question from Constantine. Hi, what do you think about gamma scalping strategies like buy straddle plus intraday futures counter trend trades? Well,
gamma scalping strategies like bought straddle plus intraday. Oh, so you're basically market making the option, the straddle, right? So you're gamma hedging the straddle. That will work if your realized vol gets near your implied vols. So that's not a bad strategy to do towards the end of the summer, probably.
A question from Sandro. Good to see you, Sandro. If you would automatically sell out of the money calls and would choose them by scoring them by the Greeks, IV, and price/day, what metrics would you use and how would you weigh them?
So I have my methodology for this when I'm prop trading, and it's the same methodology I use for playing poker or blackjack, which is how much, what is the most I can gain for the least I can lose? What is my probability of loss? That's the metric. And in fact, the probability of loss is the important metric, and the how much can I gain is the irrelevant one, because rich people don't think like us. They don't worry about making profit. They worry about not losing money. And that's the reason why they're rich.
Yeah. And I will admit, like on our daily live streams we do, a lot of times, you especially will, let's say we've had an option we sold that was 2 weeks out, and now we've got 4 or 5 days to run. You are very pragmatic about analyzing that and saying, okay, I guess what I'm trying to say is you're constantly annualizing or evaluating that risk to reward. It's like, is it worth it to keep this anymore?
Yeah. Would I, if I wouldn't write this position today, then why would I keep it?
Yeah.
If I'm holding 2 kings, but I know a royal flush flopped out on the table. Am I going to carry on with my 2 kings? Of course I'm not. Right? Yeah. I'm going to fold.
It's more common for someone, they sell it for 100 basis points. They just put their bid in to buy it back for 25 or 10 or whatever they do.
Yeah, I mean, I'll do that too.
Go. Yeah,
I'll do that too. But I'm not going to stand this out. If it's looking like it's getting dangerous to hold on, I won't hold on. I'll go and do something else.
All right.
And we did that. We did that on the Dirty Bird, didn't we? Which you could watch if you join our Patreon. Yesterday we did a little hedging trade, and it all worked out nicely.
It did work out. Sometimes things work out. It's good. Paul, summers from when to when? Well, I guess every year it's a little bit different, but essentially it usually starts in June and things just are on the decline and gets into July and August, especially August. August is usually the most quiet.
What's the saying? Sell in May and come back on St. Quentin's Day or something? That's the old stock market phrase, isn't it?
I just remember sell in May and
sell in May and go away, come back on St. Something's Day.
Yeah. It takes a while. It doesn't usually just come back, at the beginning of summer, kids are back in school. It takes a bit of time to seem to accumulate some strength and get cooking. But every year it's a little bit different, and we're going to see what happens with crypto. It was getting towards the end of September last year. So question from Sandro. Would BlackRock sell by themselves, or would only their customers
St. Ledger's Day.
St. Ledger's Day?
Yeah. Sell in May, go away, don't come back till St. Ledger's Day.
Nobody's even heard of St. Ledger's Day.
I've no idea who St. Ledger is. I guess it's probably some in-joke in the city. But
it's probably the patron saint of ledgers for
money,
accountants.
Actuaries.
Yeah, all accountants have a little icon. Yeah. So Sandro says, would BlackRock sell by themselves, or would only their customers sell their Bitcoin?
Well, BlackRock operate the ETF, but they also operate a fund that buys that ETF. So something I wanted to mention today, and I could share a screen if. Well, there's no point. You can look up CoinGlass yourself. So customers in their global diversified fund, I think it is, or one of their funds, which is a 70 billion fund. That fund is now actually buying the BlackRock ETFs shares as a small part of its allocation. So if you've got a fund with BlackRock, whether you know it or not, you're probably buying Bitcoin, or at least ETFs on Bitcoin.
Okay, that's interesting.
Yeah. So, and when I say BlackRock, I use that as a metaphor for the whole of Wall Street. The whole of Wall Street is full of greedy, avaricious, intelligent, psychopathic people. God bless them. And
yes,
if they see an angle, they'll take an angle. And one of the beauties for them about the Bitcoin ETFs is that finally, after 30 years of overregulation, there is now an asset that they can legally manipulate without going to prison. So, are they going to do it? Of course, they're going to do it.
Of course, they are. It's like you leave a steak in front of a dog and you walk away. I mean, come on.
Exactly.
Yeah. All right. Vladimir, he says, if we stay in that range, you'll be effing rich. And then an evil laugh. Excellent. Yes.
Which is why it's not going to stay in the range, right? So
too many people on.
Well, whenever you think it's going good, if it's going good for you, it means it's not going good for the people on the other side of you, which is the intelligent guys who know exactly what they're doing, making markets and being dealer brokers, and they will let you get away with it for so long. So don't get cocky, kid. If you have a good month, take some time out and spend your money.
Was that supposed to be a Han Solo reference?
Yeah, it was a Star Wars reference. Yeah,
nice, excellent.
Otherwise, you might feel a disturbance in the force.
Yeah. Yeah. All right, Vladimir. Yeah, this is actually a great idea to change your leverage. Depends on the actual devol of BTC. 100%. Andre, he recently read a story about a software bug that was related to the moon phase.
Interesting.
I guess it depends. So, like, for instance, if I'm on TradingView, there's different, like if I type in moon phases in the indicator field to see all the indicators, there's tons, people can write their own scripts, put things in there. There's quite a few different moon phase strategies out there. So I don't know much about it. But I do know that people go crazy on full moons. Like emergency rooms are busy and, things are different, right? So it's not just some, burning witches at the stake. There's something in there. I don't know what it is. Anyways, I think that's about it for questions. I don't see any other questions. So guys, if you have any last questions, put them in here. We're just slightly over 30 minutes. So great time. And I can see that Bitcoin bounced back up to 68. Actually, before we go on, I think you were saying,
let me just share our because we've talked about our miner strategy this week. We haven't shown it, so here it is. So at the moment we are short the 68k put, which means we're right at the money, expiring tomorrow. This is a nail-biting finish.
Yeah.
We might actually roll that today at some point, right? This is one of those times when it's probably not worth holding on for this 80 bips because it could easily become a $1,000 loss. This is probably a good time to dump this position. What do we get for this position? 68k. We sold it at 70. Let's run it a bit and see what happens. And then where else are we? We're short the 7th of June, just 0.2 of a contract. So that makes total of 0.3. We're short no calls. We probably should be short some calls somewhere.
Yeah, they all got bought back.
Yeah, so
on the cheap. So
maybe what we'll do is just see how it goes for the rest of today on this 31st. See if we can get this back for say 40. Actually, I should put an order in to get it back, shouldn't
I? One thing that you did,
let's stick an order in for 40 to get it back, and then when that gets bought back, If it does, then what I plan to do is probably write a 14th of June put, and maybe a strangle, a 14th of June iron condor, something like that.
I think you were talking something about, you were looking at the open interest, the open strikes, and the market long delta up to 67,000, then short.
Yeah, I was looking at options data, and then you can go in here, and then you can go to this thing, and you can bring that slider all the way down. I only discovered this a few months ago, down to 1 day. So we can see where all the open interest is for tomorrow, tomorrow's expiry. And it kind of matters because in thin markets, it's actually options markets the options expiries that drive markets. So yesterday's volatility was probably largely due to the CME expiry, end of month expiry. And I'm just looking at the net delta exposure here. So you can see that there's contracts, they're long delta at 68K and then short at 69. Kind of tells me, I think, that if we go down, the market will start to buy in order to hedge the gamma. So there's going to be a bit of support there in the market. And if the market goes up above 69, actually, it might start to run away a bit. So I'm disinclined to sell calls today. I'm happy to do that tomorrow for next week. And then looking at the end of June, which is like 30 days away, deribit could do something on this and improve this. I'm sure they've got it planned. So here, where's the delta? So we're kind of, everything's long delta, even up 75. Yeah, and there's a little bit of short delta at 64, 66. So kind of, if that's dealers and market makers, that kind of argues that I would almost suspect that we would, if we rally into the next 2 weeks, the market will probably sell a bit. But they won't unwind any of this until the last week, I think. It's the last week of June. Arguably, you might see a sell-off as the unwinding of all the hedges forces sell orders in the futures markets. If I'm right about whether this being dealer gamma and not punter gamma. If it's punters, it's the reverse.
Yeah.
That's something I look at sometimes just to pass the time of day.
I got nothing else to do, right? Yeah. Quick question here from Def. What delta to sell if you decide to sell puts and calls? Well, I mean, I'll just quickly take. It's going to depend. We've got strategies where we're selling, for example, 25 deltas, but more often than not, it comes down to the IV and the current price. But Richard, do you have any thoughts on that?
Yeah, it depends on the strategy. So on a systematic strategy, we'll always sell the same delta. On a discretionary strategy, we'll do the whole poker game. We'll decide how much we're going to bet and where we're going to bet, based on our probability of whether we think we'll get away with it or not, and what the loss is going to be if we get it wrong. So often it's actually this, because we're often dealing in call spreads or put spreads rather than naked calls or puts on the discretionary strategies. We'll often look at, what's the shape of the smile between the long and short leg of that spread, and how much value am I getting for that spread versus the risk of loss, and so on. So, but I can tell you from my back testing that on average, if you sell 40 delta 1 week calls, on average you'll make money. But it's terrifying. I mean, you have to do that naked, right? And you'll make about 10% a year doing it on average. But you will have some horrific drawdowns.
Yes.
And I think our analysis said that 30 delta puts are a good place to sell consistently if you, again, don't want to lose too much money and you don't want to manage things too much. But again, 30 delta puts, they feel fine when markets are crawling up, and they feel terrifying when markets suddenly sell off. Yeah, and actually, Defto says I'd be too scared to sell 40 delta, and that's the point. Yeah, that's why they're overpriced, because people buy them, not sell them.
Yeah, and just to clarify, past results are not guarantee of future results.
Exactly.
Past performance, so it's not trading, not financial advice. Yeah, if that was your back testing. Yeah.
If the market makers are watching this, they might all go and remark all their vols now to make 40 delta calls cheaper. But
there you go. Yeah. Come on, suckers, take it. There was something I was going to mention but I'll ask track. That's fine. I think. Oh, one last thing I would mention about that last question on what delta you said. And sometimes, so it's IV. It depends on the smile between the strikes. Sometimes it just comes down to price. The market makes a move down to 62. I think it's not going to go below 60. I'll sell the 60s or the 59s just based on price. I don't care if it's a 15 delta or a 30 delta, just because I'm playing on the technicals on the chart side. So.
That's basically a bet, right? That's a one-touch bet. You're betting that it's never going to touch that price.
Yeah, and I might do that as a spread, and if it does touch it, I might not necessarily get out of that trade. But yeah, essentially you're right. Yes, yeah, it's like a one-touch bet. Yeah. Okay, I think that's it for questions, and we've gone a little bit over time. But hey, thanks everyone for showing up. It's always great to see you. We've always got great questions. Always a lot of fun for us, and we'll see you next Thursday in June. Take care.